Okay. But my
Well, if you want us to leave, we will.
Yeah,
but you
yeah,
see,
it's up to you.
I mean, we're fascinated to hear the outcome.
Of course.
Okay, so for the benefit of the public, we've had a fairly lengthy confidential discussion with our investment advisors from Ericsson, and that's been done that way because we pay them for proprietary advice, and it's not fair to them if it becomes general. So I'd now like to throw the matter of Castle Rock open to the committee for any comments anybody has, and perhaps any motions anybody might like to move.
I'd just like it to have a little bit more advice around whether we should potentially drop below that material level.
Yeah, okay, so we've got a issue with our audit report on the basis that the audit report for Castle Rock is not available until after we have to have our audit completed, and that is an issue for our auditors because, being a relatively small council, the $1 million odd that we have in Castle Rock is considered a material item, whereas if we drop the investment to below 630,000, it would no longer get them quite so interested. So does anybody have a view on Steve's question?
Yeah, I guess, I'm interested in a split that would drop us, hearing more advice around that drops below the level of materiality, but I guess that means we take a hit because we can only sell surplus shares back to Bancorp, and we end up taking the book value, which is a hit. And then you take that same money and reinvest it into another entity for the same reasons that you stay in, having registered and taken a loss. So I'd want more information around what that looks like before I'd make a judgment call.
Agree with his worship. For me, it's more around management side of things and handling audit with the difficulties that this creates being material. For me, it's not so much the investment. I'm comfortable after talking to Ericsson's about the shifts in the market and so forth, potential shifts. It's more around the difficulties that the being material creates for management.
Okay. We need to go away and consider those issues which are specific to audit and see if they can be solved some other way, or whether the best way for solving them may be to reduce below materiality.
Yeah.
Sorry, did you have a comment?
Yes. The other option is to stick with it and have a modified audit opinion. So, in other words, we have a difference of opinion with auditors. It'd be something I imagine should go to Audit Risk Committee to discuss. But just because we have a modified audit opinion, that's not the end of the world. We've had them before. And if we are satisfied that we've done the right thing and ends up with a modified opinion, and we've got a number of years of valuations done through the annual reports of the entity, then we're satisfied that the fair valuation we're running in our accounts is reasonable.
And we've discussed the risk, the things that you've mentioned today.
Legal structure.
Yes, Mr. Chairman, I also have another question on my head. And it comes back to, why are we investing? What is the purpose and the reason for doing that? Where did this money come from? What is its purpose? And how do we use that money when we need it? Now, if we're blocked from using this money and its gains for the real purpose from which this money was collected from the ratepayer, what use is this investment? Now, it might well be an appropriate question. If these numbers and if the recommendations from Ericsson says that you got to hang in and stay in to not just recoup the losses, but to make a substantive gain, what does that look like in terms of a timeline? And what does that mean in terms of restricting your ability to use that fund in times of a need? And we know we've got developers' contributions, which we have obligations to. We need a degree of liquidity so we can pull that money to hit a need as and when we deem we must. But if we find we've got money locked up that we can't touch because it's still yet to regain its original value, and we're not sure if it's 1 year or 2 years or 3 years away, we just need to know that. We just need to be aware and comfortable that that is the situation. It's not as though we haven't got other investments that we can't liquidate. We do, but it's just nice to know what the pie looks like, what's edible now, what has to remain in the deep freeze.
Can I come because I wasn't involved when the investments were originally set up, but my understanding is that the fundamental reason for it is that Carterton District Council does not have any sort of investment portfolio of any significance, and the idea was that by investing some of the reserves that we have in something that will produce a long-term growth investment would be in the benefit of the council in the long term.
Better for ratepayers.
Better for ratepayers.
Yeah, and that's the point.
It's the same. Yeah, I mean, some councils own ports and some of them own airports and some of them own forests and we don't own anything.
Yeah, but and those councils, like, I mean, love to be in Taurong's position. They've got a till running.
Yeah.
And another like Taranaki, that they've got a revenue stream coming through. By having an investment and building that and utilising that money wisely, and getting expert advice, it's a smart move. But our purpose is not to be an investment bank.
No.
For the ratepayer. Our purpose is to make sure that financially we're in a position to meet the future needs of the community and emergency circumstances as and when they arrive, and business as usual. And we can't lose sight of that. You know, if we strike oil and Shane Jones gives us a mineral rights, hey, go up to Vinegar Hill, put a drill down, we're good. But this is not what this is for.
And the other comment I'd make is that I think we've got 3 months' notice. We can get this out at the end of each quarter, can't we? Given a quarter's notice.
Yeah.
So it's not like it's locked away.
But is His Worship talking about? His Worship isn't just talking about one investment.
No.
He's talking about the whole investment portfolio, and at this point, we're up $500,000 around.
Yeah.
Is that correct? So.
Yeah.
Yeah. I mean, I would feel that the ratepayers would be considerably happy at that kind of return in 2 years.
Yeah. And particularly given the 2 years we've had.
Yeah.
If it was easy, everyone would be doing it.
Well, some of them are not. Lou.
Question around the time frame. So, because we've still got them right now, is it going to affect the next audit? So, we may as well hold on to them.
If we disposed of them before the year end, it wouldn't affect the next audit.
Okay.
But,
So we
May as well hold for a little bit.
So we could cash out on the 30th of June if we.
Yes, well, there's no point in rushing.
I agree with Marty though. We've talked this through, and we've been comfortable with audits, opinions. And I feel today that we've thrashed this out and have more of an understanding of Castle Rock. So, yeah, for my part, I think it's been good discussion, and I'm quite comfortable to continue on with the investment.
And I'm a bit like Marty. I got the cane frequently at school, so you know, modified it. I know that's a problem. I'm a risk taker. And
honestly, who gets caught?
The punishment and move on. But I like to be able to explain to ratepayers what we're doing.
So we have two councillors here who are not technically on the committee, but Brian?
Technically, yeah, you're right. Technically, I am speaking now. So, I think we have thrashed it around really well. And the things that I see is I think we need to hang in there for the next 2 quarters at least and just see what happens. And as Steve has said, that we should be ahead by then. The other thing is I'm sort of keen to pursue that bridging letter. Whether we can get over that before we downsize this portfolio. I think it's important that if we do and if we do get a different auditor, whether it's a different company, Audit New Zealand, or the same company but a different auditor, opinions might change, and that bridging letter might be enough to get us across the line. If
Be careful what you wish for. Damn something more expensive. But look, I'm not fazed by the split thing. Worries me.
Yeah.
It worries me because you're taking a hit for what reason? To prevent a modified audit, circumvent a modified audit, or no.
Valuation goes up again.
And it goes up, and you're kicking yourself. And how do you explain that to the ratepayer?
Back above materiality.
Yeah. So, I don't mind getting the cane
Very true.
once or twice, but I prefer that than losing the money.
The comparison of this is with the alternative, which was term deposits.
Yes.
And so it's a comparison of the returns and risks. It's surplus cash. What do we do with it? Best thing is to try and get the best return on it. Lowest risk.
I'm just looking forward to the next 3 quarters, gentlemen. I saw your recommendation at the bottom of the page, and I know where you live.
Yeah, no pressure.
I'm going to come down and get that coffee too.
Yeah, take the ride on a tractor.
We're open every day.
You might not like our pies.
Okay.
Yeah.
Anything further, anybody? Well, I'd like to declare this meeting closed, and we have the closing karakia.
Very good.
Yeah.
Wonderful.
Thank you, gentlemen.
Are we going to recommend, sorry, Chair, we're going to recommend to change the SIPO
Okay.
to reflect it might be worthwhile to recommend to council that we change the SIPO to continue with the investment in Castle Rock.
Shall I move that?
Yes. Okay.
Right.
Who seconded?
Marty seconded that.
All in favour?
Aye.
Robin, you comfortable with that?
Very good. So we will recommend up to council a tweak to the SIPO and retain the investment in Castle Rock.
And you'll look at getting the bridging letter?
I will work with what we can do to get a bridging letter and satisfy Audit New Zealand requirements for the annual audit of Castle Rock. Very good.
Okay. As we were.
Sorry. Yeah.
No, I get it, Karis.
Very good. Thank you, everyone.
Kia whakaeria te tapu, kia wāti, kia sruki whakataha, kia sruki whakataha, haumea hui e tai ki.
Gentlemen.
Kia ora.
Peter and Jonathan.